Hello, everyone, and welcome to the Municipal Pension Plan's 2022 Annual General Meeting. My name is Hilary Brown, and I'm the Chair of the Municipal Pension Board of Trustees. I would like to begin by acknowledging what a privilege it is for us to be here on the territory of the Lekwungen people, also known as the Songhees and Esquimalt nations. We acknowledge and thank the Lekwungen people for allowing us to live, work, and play on their lands. We honor their ongoing connection to the land and respect the importance of the diverse teaching, traditions, and practices within this territory. Thank you. We have a full agenda today. First, we'll go over last year's financial highlights. We'll hear an investment update from BCI. Then we'll have a presentation for you on the valuations, the latest results, and why they're so important. We'll also have a message from the chair of the new Municipal Retiree Benefit Trust. Then we'll look at what's ahead for the Municipal Pension Plan. And finally, we'll move into the question and answer session. Experts are available to help answer your pension and investment questions. The AGM is for you, so if you have questions or comments, we'd love to hear them. Feedback can be sent to the email address on your screen. For the Q&A session, you will be asked to enter your question in the box at the bottom left of your screen. If you have a personal pension question to ask, that can be done through My Account. That link appears on your screen now. Each of the organizations you see on the screen are responsible for appointing at least one of your plan's trustees. All trustees are appointed by an organization. Thank you to the trustees who are here with us today. It's a privilege to work with you as we do our part to guide the Municipal Pension Plan in the interest of members and their beneficiaries. Let's quickly go over the organization of the plan. On your screen, you'll see the structure of the Municipal Pension Plan. Starting at the top, the employer partner is the BC Government together with the Union of BC Municipalities. The member partner is the Municipal Employees Pension Committee, which represents you. These entities and other appointing authorities nominate trustees to your plan's board. We are a joint trusteeship. This means employer and member representatives share the responsibility of managing your pension plan. Here you can see how we, the Board of Trustees, fit into the overall structure. We also have the Office of the Municipal Pension Board of Trustees. This office works to directly support trustees and includes staff employed both by the board and the BC Pension Corporation. The plan's executive director, Judy Payne, is also with us today. Finally, we have a number of agents and service providers we work with. Several representatives are here with us today, including Aaron Walker-Duncan, representing the BC Pension Corporation, the plan's administrative agent. Aaron is a Vice President of Board and Communication Services. David Morhart is the Executive Vice President of Corporate and Investor Relations for the British Columbia Investment Management Corporation. BCI is the plan's investment agent. For Eckler Limited, our plan actuary, Catherine Robertson, is here. Eckler provides actuarial services for the plan. We're also pleased to welcome as a special guest, Bonnie Pearson, Board Chair of the Municipal Retiree Benefit Trust. Thank you all for being here. Of course, the most important people joining us today are you, the members, your unions and employers' representatives. Proudly, we can say that more than 395,000 people like you look to the plan to provide a reliable income in retirement. Thanks to research from the Canadian Public Pension Leadership Council, we know that every $10 paid in retirement income supports nearly $16 of economic activity in BC. Working together, we are helping to create local jobs in BC communities while providing a dependable income to retired members. We hope that you enjoy today's events and that it helps you learn more about the security of your pension plan. So who are our members? Understanding who you are and what's important to you is critical to managing the Municipal Pension Plan. Our members include retirees and people working in healthcare, public servants with local governments, people in community social services, police officers, firefighters, and staff at school districts and colleges, all of whom are working to improve lives in their communities. Many of you are actively contributing to the plan. You're working hard, building a future and caring for your families, or you might be away from work right now, focusing on the things that matter in life, like caring for a newborn or looking after a parent. We also know that nearly a third of you are retired and receiving your pension. You, or perhaps your spouse, made contributions to help grow the plan. The fact that the Municipal Pension Plan is the largest pension plan in Western Canada is proof of your hard work and dedication to your communities. I'm proud to welcome you all to the Municipal Pension Plan's 2022 AGM. We appreciate your comments on this event. Those can be directed to mpbt@pensionsbc.ca. Again, that is mpbt@pensionsbc.ca. Once again, here is our agenda. Let's get started. Vice Chair Gary Yee is next with this year's financial highlights. Gary has been on the board since 2014, and I know he's excited to talk to you about the plan's finances. Please welcome Gary.
Hello, I'm Gary Yee, Vice Chair of the Municipal Pension Board of Trustees. Let's take a moment to reflect on our retirement years. What are your hopes and plans for the future? Will you be a great grandparent? Perhaps you want to start a new career, launch a business, or work part-time in your community. You could be looking forward to touring the province in an RV, or catching up on crafts, learning a new hobby, or just spending more time with the family. Every one of us has a different outlook for the future. No two dreams are the same. As you enjoy retirement or make plans for the future, know that you can count on your municipal pension to remain a reliable part of your retirement income. So join me for an update on your pension plan's finances. Let's get started. Our role as the Board of Trustees is to make investment decisions in the best financial interest of the plan's beneficiaries, which includes you as a plan member. This is something we take very seriously, especially as we continue to see uncertainty in world markets. Despite continued efforts of the multi-year pandemic, supply chain disruption, and the impact of geopolitical events around the world. The value of the Municipal Pension Plan's asset grew to $74.2 billion at the year ending December 31st, 2021. That's an increase of $7.7 billion or 11.5%, which exceeds our benchmark of 7.8%. The 5-year return was 9.7% compared to the benchmark of 8.5%. In 2021, the plan added $7.9 billion from investment returns. Members and employer contributions added a further $2.5 billion. Approximately $2.7 billion was paid out in pensions, benefits, and expenses. You may recall that following the 2015 valuation, we used surplus funds to create a rate stabilization account. This fund can help protect against future contribution rate increases for employers and active members. The value of the account has now reached $3.2 billion. The plan is growing and it's in a strong position. So how did we get here? The answer is by adopting a long-term view. As we look into the future, we can see the value of committing to responsible investment strategies. This means considering the environmental, social, and governance factors that can impact an asset's long-term value. For the third year now, we have released climate-related financial disclosure for your pension plan. These disclosures highlight best practices and provide a positive example of the transparency of climate data in capital markets. We believe it is important to provide you with transparent information about climate change and how we take climate-related risks and opportunities into account in investing the pension fund. This approach demonstrates our commitment to transparency and informing you of our climate action initiatives. Maintaining the strength and resiliency of the plan is critical to prepare for the challenges of the future. Despite the uncertainty of our times, your municipal pension plan continues to deliver on its goal of providing secure pensions to members like you. The steps we are taking today will ensure the plan remains strong well into the future. It is true that no two dreams are the same. Whether yours involve reaching the peak of the highest mountain or finding more time to share stories with your loved ones, your plan will continue to be a dependable source of income and help you achieve your goals. Thank you.
Thank you, Gary. We're grateful to have such good financial news to share. Next, I am pleased to introduce Harpinder Sandhu, Chair of the Municipal Pension Board of Trustees Investment Committee, and Gordon Fife, CEO and Chief Investment Officer of BCI, the plan's investment manager. Together, they will provide an update on the plan's investments. Please welcome Harpinder and Gordon.
Hello and welcome everyone. My name is Harpinder Sandhu. I am a board trustee with the Municipal Pension Plan. I've been on the board for 3 years, appointed by the Canadian Union of Public Employees in BC. And in my work experience in relation to international finance, geography, and economics, and my experience with the Public Service Pension Board has worked well with me being as the chair of the investment committee here. The role of the investment committee essentially has, sets the overall direction for investments through the Statement of Investment Policies and Procedures, the SIP, and it also coordinates asset allocations, reviews, and updates. It also monitors investment performance and oversees BCI's investment activities for the plan's fund, and leads the board's work on climate action. Our key relationship with BCI is that the board is responsible for overseeing an investment portfolio of $74.2 billion on behalf of the members. And the primary objective is to ensure that the pension plan is secure and stable over the long term, which depends on several factors, including whether the plan earns enough through its returns on investment. The board sets the investment beliefs and financial goals of the plan through the SIP, and BCI puts that investment strategy into action, and the board monitors investment activity and progress. And with that, welcome Gordon Fife, BCI's CEO and Chief Investment Officer since 2014, with more than 30 years in the investment and finance industry. He is responsible for managing over $200 billion on behalf of British Columbia's public sector.
Thank you very much. Yeah, I just passed through eight years this summer back in Victoria. I grew up in Victoria, but I moved back 8 years ago to run BCI.
Nice to have you back home.
I agree.
And so what I'd like to do next is, we have a few questions for you. So maybe I'll just dive right in if you're ready.
I'm ready, sir.
All right. So essentially, when we see the returns over the past year, these are great results for the plan. Investment activities certainly helped drive the growth in the plan's assets. However, what were the key drivers in this performance, and how did BCI approach the challenges we saw in the market last year?
Sure. Well, if we're going to look at 1 year, and I'll talk more about that in just a moment, but let's look just at 1 year because we like to look longer term. But yes, Harpinder, you're absolutely right. It was a very, very strong year for the fund. The return overall in the portfolio was 11.5% during the year. That compares to an overall benchmark. So if we weren't making any active decisions, the portfolio would have returned 7.8%. But with all of the active decisions, 11.5% overall. Now that compares to your actuarial rate. So how do you keep the contributions and the benefit payouts in balance? You need to earn 6.5% per year, and we did 11.5%. So it was a very good year. And the returns came, very strong returns actually, in any of our ownership positions, equity ownership or real estate ownership, infrastructure ownership. So for example, our private equity portfolio returned over 30% last year. And our public equities, so those are the ones that are trading on a stock exchange, those shares returned over 14% last year. The real estate portfolio had a 14.5% return, and infrastructure, we think of infrastructure as being very low risk, very low volatility, but it actually generated a 12.5% return during the year. The only asset class that was negative was bonds, because interest rates, if you'll remember, were going up quite aggressively. But even there, whereas the overall bond market, as we measure it, was down almost a full percent, the way we had managed the portfolio, our return was only negative 0.2, so 0.2 of 1%. So just a fraction of the overall negative return in bonds. So all of those different investments contributed to the return. But in addition to just generating the return, our portfolio managers took advantage of what they thought were exceptionally strong markets, and they did begin selling some large chunks of assets, particularly in private equity. We sold quite a bit of private equity at the highs at the end of last year and early this year. So all of that cash has come back in, and we're sitting on it now as the markets come down, and we have that available to reinvest as things get much cheaper. Something else, we've been working with your board, with the municipal pension plan over the last 8 years to change a lot of things about how we're managing the funds. And one of the things we've done is brought a lot of the money that used to be managed for us by external managers. We've brought that in-house. So we're making those decisions today inside of BCI. So instead of paying huge fees to external managers, those fees now we don't pay them anymore, so that becomes a part of the return and flows through and into your plan, and that saved us significant amounts of money. We've also diversified the portfolio significantly over the last 8 years, and when I say diversify, I mean we've changed and added a lot of new asset classes that weren't there before. We've changed geography. We were heavily weighted to Canada previously, and we've reduced that, and we're now invested in many countries around the world. And that makes a large difference because not all countries are exactly the same economic sync. But we've also diversified the range of products, and so more credit and other parts of the capital structure on offer. But as I mentioned at the beginning, we don't tend to evaluate over just 1 year. It's important. Your pension liabilities are very, very long term. So we look at our returns and we position the portfolio for the long term. And let's look at 5 years. And over 5 years, the fund has generated 9.7% on average per year in each of those 5 years. And that's against a benchmark. So if we weren't making any investment decisions and just indexing everything, we would have earned around 8.5%. So that's 1.2% per year of value add in each of those 5 years. So again, the more important number is almost 10% per year over the last 5 years, which is keeping the plan in a very good surplus at the moment.
Yeah, so that almost leads me into the next question. Essentially, we have investments that are a big part of how we make our commitment to a lifetime pension for our members, and our work with BCI plays a major role in our community, in our committee. But we monitor short-term results, of course, as you've outlined. And as you've said so many times, we've really are in it for the long term. So let's look at both. So far in 2022. Has brought market challenges with high inflation, supply chain disruptions, and rising interest rates. So can you share with us what you're currently seeing in the market and how BCI is working with us as a board to prepare plans portfolio for the long term?
Maybe a really simple way, but a clear way of explaining what's going on is we entered into the COVID crisis, everything shut down, and so central banks, governments were concerned that the economy was going to flatline. And so they began pumping a whole bunch of liquidity, printing money, if you want, to provide liquidity to the markets and try and get us through this very, very difficult period. Well, all of that's going on. So you think about the amount of money in the system is growing through all of this. And some of that's going in and helping people who were having problems losing their job during the COVID. But some of it went into the financial markets. So think of the financial markets as a giant sponge. The more money you create, the more that sponge sucks up the money and the higher the prices get. And that's what happened. So the governments, the central banks were printing so much money, more than was actually needed by the consumer, and all of that excess money, that excess liquidity ended up going into assets, houses, and other financial markets, and the prices of those went up. What we're facing now is that the central banks were very slow to tighten. They thought that COVID was going to continue to come back. They thought that inflation was, as they called it, transitory, and it was a temporary situation. It wasn't, and inflation got away from them. And so they were a bit slow getting started, and now they're fighting the battle against inflation, and they must and they will stop inflation. We have gone through this back in the late 70s and early 1980s when central banks were fighting inflation, and then they backed off too soon, and inflation came back very quickly, and then they had to get very aggressive. So there are lessons in history where they backed off too soon, and they're looking at those, and they're not going to back off. So they're going to keep on tightening for some time to come. That means raising interest rates, but also, if you've heard the term quantitative easing during the financial crisis, what they're doing now is they're quantitative tightening. They're actually pulling money out of the system. So they're squeezing that sponge to bring the excess money out, and you're going to see asset prices coming down because they need to balance the demand for goods with the supply of goods, and there's some outbalance there. And if we all feel poorer, so if asset prices come down, if our house prices come down, if stock markets come down, we're all going to feel poorer, and we're all going to spend less. And if we're spending less, we're demanding less, and that helps balance things out. And you're right when you mentioned that, Harpinder. BCI and the municipal board have spent the last 8 years preparing for exactly these sorts of scenarios. And as I mentioned before, we've been diversifying by assets, by geography, by products. We've been internalizing the investment decisions, taking money away from external managers where we can keep those fees, gain more control of the assets because now they're ours making the decision, but also, more importantly, to reduce the fees that we're paying. And in some cases, those fees are 4 to 5% per year of the underlying assets. So that's been a significant contributor to the returns. But we've also improved a lot in the last 8 years. A lot of our systems, technology, our ability to manage the investment risks in our portfolio, but also to monitor the amount of liquidity that we have. And what I mean by that is we never want to be in a position where we need to have cash to pay the benefits. And so we're forced into selling an asset that we don't want to sell at a time that we don't want to sell it. Because if you have to sell in the middle of a crisis, you're not going to get a really good price. So we're monitoring and managing our liquidity in the fund very, very closely. So we're ready we're ready as we can be for whatever is going to be happening this year and into next year. Now, we were ready back in 2020, but the thing is the markets declined and recovered so quickly in 4.5 weeks, we didn't have that many opportunities. So BCI is ready. We're not going to panic. And we're not going to find ourselves in a situation where we're forced to sell. And what we're hoping is that, like happened back in the great financial crisis of 2008 and 2009, we're going to be in a position to take advantage of other owners' panic, and they'll be forced to sell, and we'll be able to buy great assets at presumably discounted prices.
Yeah, and based on that, the diversification that you've talked about and of our asset mixes, it leads into my next question. So, one of our central activities as an investment committee is to review and recommend updates to the plan's asset mix. It's something we review on a regular cycle, and we actually spend a significant amount of time on it. So, would you like to talk a bit about what the asset mix is and then why it's necessary?
Oh, yeah. It's in fact, it's the most important decision we make in the plan is the long-term asset mix, because our job meaning both your job and my job together, Harpinder, it's not to maximize the return in the portfolio. Our job is to make sure that the contributions that members are making throughout their working life are there and invested in a way to make sure that when they retire, there are enough assets to cover their pension payments. So the risks that we have to take in the portfolio have to be aligned with the level of long-term return that's required to do that. We're not a hedge fund. We're not going out and looking to make 20% every year and taking a risk that's along and aligned with that. So we need to look at what our job is, which is to make sure there's money to pay the pensions when people retire. Basically, the contributions that everyone makes, which is around, say, 25 cents, and then the returns that we make over the period that you're working, which adds up to 75 cents, is the dollar that you get when you retire, and that's our job. So again, your board, the Municipal Pension Plan, and all of their advisors, which includes BCI, we're looking and working to design a mix of assets that best match your liabilities. And this work is, we talk about it all the time, and there's a complete revamp of it every 3 years. And the reason we do that is there's a whole bunch of different assets. You can buy money markets, for example, and put it on deposit, but it's very low risk, but it's going to be very low return, and there will not be sufficient amount of money at the end when you retire to pay your pension. And there are other assets like private equity that offer a great long-term return, but it's going to be very volatile, and there's a lot of risk, more risk than we need to take in the overall portfolio. So our work is to find the best mix to match this particular structure of liabilities that exist. So, I think if I just to mention, just like people are saying, well, what kind of changes have you made over the last year? And just a couple of the things that we've done is we've significantly increased the weighting in private assets, so infrastructure, real estate, private equity, because your assets are so long-term. And I think I mentioned earlier as well, we've put a lot more assets diversifying outside of Canada as well.
Yeah, no, definitely these are really important points, and this is why we're having this discussion to outline the process and the reasons why we have such an asset mix and why it's so important. So thank you for that. And related to the importance of the diversification, we also have the importance of responsible investment, which has been a theme for the board for many years. I know BCI shares that belief. BCI published its latest Environmental, Social, and Governance annual report in the summer. Can you provide an update on BCI's ESG approach and how this approach supports the board's responsible investment beliefs?
Let me restate what you, or just repeat what you said, and that is that Harpinder, you and the municipal board have done a very good job communicating to BCI that assessing and managing these environmental, social, and governance risks and opportunities, it really is a fundamental part of your mandate to grow and protect the plan's funds. So you've done a great job of communicating that to us, and I can assure you that BCI is totally aligned with you. And so in all of our investment decisions, we're looking at the behavior of the companies and the assets that we're buying, because if in the end a company is acting badly, and when I say badly, it's acting badly towards its employees, towards its customers, towards its shareholders, towards its community, or towards the environment, over the period of time that we're going to be owning that company, which is multiple years, sometimes decades, the bad behavior is going to hurt the value. Sometimes it'll actually destroy the company because some businesses act so badly that they end up losing their license to operate. But they may just lose customers. They may lose employees. All of these things hurt the value of the business that we're investing in. And so we do a very, very thorough job of, in every investment that we make, analyzing all of their behaviors to make sure that they're aligned with ours. Now, we won't just sell every business because of some bad behavior, because if we sell, then what ends up happening is we lose any opportunity to influence the business to improve. And so we are very active, and we have a very large team that is constantly meeting with the companies that we own, evaluating and then persuading them to make improvements if we identify some deficiencies. And what's interesting but also important is that we don't do this on our own. There are other like-minded investors, particularly the large pension funds, not only in Canada but around the world. And we gather with them, and we will find companies that we feel are behaving badly, and we will collectively go and put a lot of pressure on their boards to change their behavior. So BCI does have a corporate-wide ESG strategy, and as I said, we're making sure that this is a part of the investment process and a part of the investment decision in every asset that we're looking at buying. But I want to remind everyone that ESG is not only about avoiding risks, and it's not only about attacking companies that are behaving badly, because there are huge opportunities that exist as well in new technologies and new businesses that are working in this transition. And so we have large teams that are also considering that. And as you said, Harpinder, I would strongly recommend for anyone that's interested in more details to look at our 2021 ESG annual report and the supplementary case studies that are there. And you can find that on our BCI website.
Yes, thank you so much. And then related to the ESG, there's a lot of our members and of course take keen interest in certain issues around the E, which is the environmental issues. And we as a board take a responsibility to manage the fund in the best interest of the plan beneficiaries. And that includes the commitment to address both the risks and opportunities presented by climate change. So as a final question, how does BCI look at climate-related risks and opportunities in the portfolio? And how important are transition-related assets like green bonds and renewable power to this overall strategy?
I've seen during this year estimates that there's going to be trillions of dollars required over the next few decades, because this is not a quick fix, but trillions of dollars over the next few decades to address climate change. And the thing is, we need to realize that all of this money will not, and it cannot come from governments. And private investors and institutions like BCI are certainly going to have to be involved in financing and contributing to investments in this areas. But these are opportunities not only to improve the climate situation, but also to invest in businesses that are going to generate great returns as this shift takes place. And I'm going to repeat that nothing that we're doing, though, is at the expense of returns for the plan. But what we're doing is seeking out investments that are going to benefit the energy transition, but also at the same time contribute to the returns of the plan. And since 2020, for example, you asked about green bonds. Quadrille, our real estate subsidiary, has issued over $1.2 billion of green bonds so far, and they're continuing to do that. In another area, our infrastructure team has recently reached an agreement to purchase Redden Solar, which has got solar operations around Europe and in Latin America. And it was published in the spring, I think it was, that Mosaic, our timber company, they announced that they're taking a sizable piece of their forests and setting them aside for carbon credits. And our real estate company, Quadrille, I mentioned the green bonds, but they also have an extensive real estate portfolio that's nearing almost $60 billion. There's a lot of real estate in there. Those buildings need to be heated and cooled, a lot of energy going in. Quadrille has a very large and dedicated team that's looking at each existing building, but also new construction, and seeing how the carbon footprints of those buildings can be reduced through changes to the HVAC systems and the envelopes of those buildings. So these are just a couple of examples of what BCI is doing on climate within the actual and existing portfolio and assets that we own, Harpinder.
Great. No, thank you so much for spending time with us here. I think these are, an outline of what we do to support our membership and the plan beneficiaries, and the importance of all the investment strategies that go into this. I appreciate your time in joining us, and from there, as if there's any closing comments left over, we'll just give you a moment.
Well, I guess to quote a chairman that I had many years ago when I was running the federal government's fund, markets go up and markets go down. And right now we're in a period where markets are going to go down. You'll get days when you get a good rally, but we're in a situation where interest rates are going to go up for a while. Inflation has to come under control. And I know that people are going to worry about, well, what's happening to my pension fund? And you're going to maybe think that we're crazy because you may see that we're all sitting here smiling. We know what we're going to be doing during a crisis like we're starting to get into now. And that is, we're very well positioned. We have liquidity. And we're going to stay calm. And what we're hoping is, like back in 08 and 09, we're going to have great opportunities to buy assets we never would have imagined we could have bought at sale prices. And so we're going to go through a rough period. You may read in the paper that's, oh my gosh, the returns were negative this year. But remember, we're not being forced into selling anything. We're actually out deploying capital. We're buying assets at cheaper prices, which are going to perform very well in the decade ahead. And that is our job. There's nothing we can do to stop market decline, except we will be taking advantage of it. So buckle up. It's going to get rough, but we are well positioned to take advantage of that over the longer term. Thank you, Harpinder, for the chance to address the meeting today, and it's always great to chat with you.
Yeah, thank you for the sound advice, and appreciate it. I think you've reassured our membership, and always great to chat with you also. It's Gordon Fife, CEO of BCI.
Thanks, Harpinder.
Thank you, Harpinder and Gordon, for that engaging discussion. Next, I'm pleased to introduce Robert Weeks, Valuation Committee Chair, to present the 2021 valuation results. Over to you, Robert.
Hello, everyone. My name is Robert Weeks, and I chair the Municipal Pension Plans Valuation Committee. We'll begin with a video exploring what a valuation is and why we do it. Imagine you're responsible for a pension plan that more than 395,000 people look to for a reliable income in retirement. With $74.2 billion in assets, the decisions you make can have a lasting impact on people's lives and the success of the plan. This is where valuations come in. They help trustees like me keep your municipal pension plan on the right track so that members like you can collect the pension you've saved for and earned through years of hard work. Employers can offer a valuable benefit to their employees, and communities can enjoy the economic benefits of pension spending. Valuations look at things like estimated costs and expenses. An independent actuary provides advice on future risks and opportunities. How many people will be collecting in the years ahead, and for how long? What will the plan cost to administer? How much will members earn in the future? What returns do we expect on our investments? The result is a snapshot of the plan's overall health at a point in time, and a look at how different economic and demographic changes might affect the plan. At least every 3 years, our valuations answer the important question, how much money is left after taking into account all pension commitments? Importantly, they help us manage the plan so your pension benefit can be paid to you when you retire. If there is a surplus, the Joint Trust Agreement guides how those funds can be used. Following the valuation in 2015, we created something called a rate stabilization account that is funded by surpluses and earns investment income. The money in this fund supports long-term plan stability and can help cushion you and your employer from rising contribution rates. Surplus funds may also be contributed to an inflation adjustment account to help pensions keep pace with the rising cost of living. The valuation informs the board as we consider what level of cost of living adjustments, or COLA, the plan can support for the next 3 years. The board has adopted a sustainable model to best manage cost of living adjustments, so they remain available for not only current, but also future retirees. Want to learn more? Check out the Learning Resources section on the Municipal Pension Plan website. As you can see, valuations are a very powerful tool we have for managing the plan's financial health in a careful, prudent way. Valuations are performed at least every 3 years, as required by our joint trust agreement. Today, I am pleased to share with you the results of the most recent valuation, which shows us the health of the plan as it was on December 31st, 2021. Perhaps the most important number that we get from this work is the plan's level of funding. When a pension plan is fully funded, that means we have all the money needed to pay our members current and future pensions based on current contributions continuing. As at December 31st, 2021, your municipal pension plan was funded at 105.3%. Moving now to our economic outlook, we are expecting lower rates of returns on our investments. The world's economic situation has shifted, and we are seeing market fluctuations, rising inflation, supply chain challenges, and lingering effects of the multi-year pandemic. The board takes a conservative approach when we make forecasts about the plan's future performance. We also avoid overreacting to short-term trends. As such, we have lowered the discount rate from 6.25% to 6%. This is our assumed rate of return on plan investments over the long term. The board has adjusted the plan's asset mix to account for these lowered expectations. Let's now look at the update on the plan's demographics. Here we can see the breakdown of active members by age. About 36% of you are 39 or younger. People in their 40s and 50s make up about 53% of the active membership. Those over 60 are around 11% of active members. It is important to note that the proportion of plan members who are retired is increasing. We make use of data analytics from a company called Club Vita to help us understand and manage risks associated with member longevity. After taking into account these membership trends, we see the plan continues to remain healthy. We recognize that an aging membership means we will increasingly depend on investment returns to maintain the plan. We're also assuming that the average retirement age will continue to increase and plan members will live longer, healthier lives. This means we can expect to see further increases to the proportion of retired members in the plan. The latest valuation also showed we have a surplus of $3.76 billion for 2021. We will look at how that is used in a moment. When looking at the plan's funding, about 1/4 of a person's pension comes from member and employer contributions. The rest is made up of returns on our investments. The 2021 surplus is great news for the health of the plan. It is also a reminder of how important it is that we continue the strategies that have been successful for us. This includes our commitment to responsible investing and assessing and managing risk over the long term. Here we can see how this most recent valuation result compares with the past years. The plan has been fully funded since 2015. Following the valuation in 2015, we created the rate stabilization account. I'll talk more about that in a moment. That account continues to grow, resulting from the surplus funds we've transferred, as well as growth in the fund's investments. The joint trust agreement directs that a portion of the surplus be sent in equal amounts to the Inflation Adjustment Account, or IAA, and the Rate Stabilization Account, also known as the RSA. The RSA is used to reduce the likelihood of contribution rate increases. And the IAA can help members' pensions keep pace with inflation as the costs of goods like groceries and gas increases. From the $3.76 billion of the surplus, about $2.46 billion will be kept in the basic account as a contribution cushion. Another $277 million will also be used to maintain current contribution rates. That leaves us about $1.02 billion to split equally between the rate stabilization account and the inflation adjustment account. As part of the valuation process, the plan actuary determines the cost of living adjustments, or COLA, the plan can support over the long term. As a result of the 2018 valuation, we capped COLA increases to 2.1% to help ensure meaningful COLA for current and future retirees. Because of the current health of the plan, and based on the advice of the actuary, the board cautiously decided to remove the COLA cap for the next 3 years. For 2023 through 2025, the board will instead consider COLAs up to the increase in Canada's Consumer Price Index, CPI, from September to September. For example, a COLA effective on January 1, 2023 may reflect the increase in the CPI from September 2021 to September 2022. Although there is no cap on COLA during this time, trustees still have the option of providing a COLA less than the increase in CPI from September to September. The board's COLA decisions are dependent on the health of the plan. COLAs, when provided, take effect January 1. The amount of COLA effective for 2023 will be posted on the plan's website in January. It will also be in the winter issue of Pension Life, a newsletter distributed to retired members. Sustainable COLA is closely tied to actual inflation levels and actual investment returns. We will review what the sustainable COLA level is every 3 years as part of the actuarial valuation. To conclude, investing responsibly and managing the plan's assets in a prudent way continue to produce positive results. We've seen a lot of turbulence and uncertainty in recent years. The COVID-19 pandemic, supply chain challenges, rising inflation, and uncertainties resulting from global conflict. These are circumstances that have tested our assumptions. Our most recent valuation shows our strategies are working, and the municipal pension plan remains in a strong position for members. Thank you.
Thank you, Robert. We will now hear from the chair of the new Municipal Retiree Benefit Trust, Bonnie Pearson. Bonnie, over to you.
Hello, Municipal Pension Plan members. On behalf of my colleagues on the Board of Municipal Retiree Benefit Trust, or MRBT, I would like to thank the Pension Board for offering us the time to speak with you today. On January 1st of this year, the MRBT took over the responsibility of managing the trust fund and administering your retirement health benefits. Let me tell you a little bit more about why that's good news for you. We know that access to affordable health and dental benefits is important to all members, whether you're retired or still working. The MRBT Board of Trustees prioritizing making group benefits accessible to current and future retirees. Access to group benefits through your pension plan is not guaranteed the way your pension payments are. Having a sustainable source of funding helps us continue to provide access to these benefits in the face of rising costs. To understand how the Municipal Retiree Benefit Trust improves the sustainability of the group benefit program, let's take a closer look at how the trust works. MRBT is an Employee Life and Health Trust, or ELHT. ELHTs are trusts created to pay benefits to employees and related persons. In this case, employees are former members of MPP plan employers who are collecting a pension. The operation of ELHTs are regulated by the Income Tax Act. Funding for the trust comes from three sources: a one-time transfer of $100 million from employer contributions in 2021, ongoing employer contributions of 0.6% of salary, and premiums paid by retired members enrolled in extended health and dental benefits. The MRBT fund can now accumulate and be invested to earn income. Its funds are invested by BCI, the British Columbia Investment Management Corporation, under the guidance of the MRBT board. The MRBT board will be working with the plan actuary to forecast the sustainability of the plan relative to the current benefits offered. This will enable the board to make decisions that balance the short-term and long-term interests of plan members. This more stable source of funding contributes to the sustainability of the group health and dental benefits program. The trust governance structure also contributes to its long-term sustainability. The MRBT is governed by 8 trustees. At least 2 trustees are retired members of the municipal pension plan, and at least 2 are active members of the plan. 4 of the trustees are appointed by the member partner, the Municipal Employees Pension Committee. Those trustees are me, Bonnie Pearson, Lauren Burkhart, Janice Morrison, and Tom Stamatakis. The remaining 4 trustees are appointed by the employer partner, the provincial government, and the Union of British Columbia Municipalities. Those trustees are Lynn Coker, Dean Levange, Diana Loken, and Gary McIsaac. All trustees bring a wealth of professional experience and qualification in relevant areas such as healthcare, benefits, and joint trusteeship. You can read more about the background of each trustee on the plan website. The Municipal Retiree Benefit Board of Trustees works closely with the Municipal Pension Board of Trustees. MRBT trustees are solely focused on the health and dental program for retired members, while MPP trustees are responsible for the governance of your pension plan as a whole, and some trustees serve on both boards. Each board was established under a separate agreement of the municipal pension plan partners. The MRBT board chair and vice chair meet regularly with the pension board chair and vice chair. Your retirement benefits will continue to be provided by Pacific Blue Cross. You have the same coverage and group health number as before, and you can continue to make claims the same way. Please continue to contact Pacific Blue Cross for questions about coverage and claims. BC Pension Corporation continues to provide benefit administration services for the extended health and dental plans. Contact BC Pension Corporation if you have questions about premiums, questions about enrollment in extended health care and/or dental plans, have moved outside BC or Canada, or changed your name or contact information. The easiest and most secure way to contact BC Pension Corporation is through My Account. Visit mpp.pensionsbc.ca and click My Account to sign in. You can also contact BC Pension Corporation using the Contact Us page on the plan website. It has been my pleasure to be here today with all of you. To learn more about the Municipal Retiree Benefit Trust, visit mpp.pensionsbc.ca and click About Us, Who We Are, Municipal Retiree Benefit Trust. We will also share more information in the winter issue of the retired member newsletter, Pension Life. On behalf of the Municipal Retiree Benefit Trust Board of Trustees, thank you for your time today. We are proud to have the opportunity to support your access to sustainable post-retirement group benefits. And now back to you, Hillary.
Thank you, Bonnie. We appreciate your update on the Municipal Retiree Benefit Trust. We'll open things up for questions momentarily, but first, I want to provide all of you with an update on some of the activities and goals for the year ahead. Our 2020-2023 strategic plan concludes in June. That framework set an overarching priority to strengthen plan awareness and advocacy, enhance plan governance, and promote plans to sustainability. We're working toward improving awareness of the plan and advocacy by developing a strategy to more effectively communicate with younger and future members so they learn about the plan's values and have their needs met when they join the plan. For example, helping them learn how they can maximize their pension and how they can get a head start planning their finances. We're enhancing plan governance by exploring investing in a manner that is compatible with climate targets that respond to the challenges of global warming. This includes the Paris Agreement goal of keeping global average temperature rise below 2 degrees, above pre-industrial levels. To promote plan sustainability, we're examining eligibility requirements that may enable more employees and their employers to join the plan, and enhancing the onboarding process for new trustees. We're also now turning our attention to planning for the next 3 years. The board remains committed to continuing to build the plan's sustainability and meeting the challenges presented by climate change. This means guarding your pension against the risk of a warming planet, but also seizing upon the financial opportunities to support the solutions. In this way, investments can be compatible with the Paris Agreement commitment while also serving to grow the value of the pension plan in order to meet our fiduciary duty to invest the plan funds in the best interest of all beneficiaries. Our third climate-related financial disclosure can be viewed in the recently published 2021 annual report. The board believes that better access to climate-related data helps investors assess, price, and manage climate risks. We are committed to providing disclosures in line with the world's leading framework, the Task Force on Climate-Related Financial Disclosures, also known as TCFD. Look for more information on climate action on the plan's website later this year. Recognizing the vital importance of responsible investing is why the board and BCI are also signatories to the Principles of Responsible Investment, or PRI. Since 2007, we've been signatories to the United Nations supported international network of investors. We share a goal of incorporating environmental, social, and governance considerations into the work of large-scale asset owners like the Municipal Pension Plan. Enhancing your plan's resiliency also requires a focus on people. Looking to the future, reaching younger and future members remains a priority. The Municipal Pension Plan creates so much value for people as they build their retirement savings. With the uncertainty of today's economy, it can be a challenging time for young people starting their lives and careers. Our pension can help to ease some of those worries by being a strong component of retirement planning. A 2019 report from the Canadian Public Pension Leadership Council, or CPPLC, showed Canadians over 65 without an employer pension had average retirement savings of $97,000. People with a pension plan had an average of $469,000 saved up for their retirement years. These are benefits that we can point to as we grow the plan and aim to attract and retain members. An important part of the pension story is how defined benefit plans like ours impact the communities we serve. CPPLC's research last year showed over $10 of pension payments in BC produced nearly $16 of economic activity. Public sector pension plans also supported $2.8 billion in tax revenue in British Columbia. Discussing the impacts of plans like MPP helps raise awareness of the plan's value to British Columbians and their communities. Website enhancements can also improve the quality of service we provide to members and employers. We want to make it easier for our employers to access pension information and manage employee files. Our goal is to make the employer website more intuitive and easier to navigate. The way employers can complete their tasks employers can complete their tasks faster and have more time for other priorities. Before we jump into the questions and answers session, there are just a few housekeeping items I'd like to cover. As you direct your questions to the panel, here is a reminder of the different roles we have with the Municipal Pension Plan. Your Board of Trustees is responsible for administering the pension plan and managing the pension fund, including the investment of assets. BCI is our investment agent. BC Pension Corporation is our administrative agent. BCI and the Pension Corporation both operate in accordance with the board's directions. Pacific Blue Cross administers the group benefits program for our retired members. It does this through the Municipal Retiree Benefit Trust. Other experts will also be on hand to help answer your question. To ask a question, enter it in the Ask box located at the bottom left of your screen. We will get to as many questions as we can. If we run out of time and we don't get to your question, a response will be published to the plan website in the coming weeks. Once again, you can ask a question by entering it in the Ask box located on the bottom left of the screen. Just a reminder that if you have a personal pension question, those can be sent through My Account. We'll put that link on the screen again now. From the plan website, sign in or register for My Account and locate the envelope icon on the top right of the webpage to send a personal pension question. You will be contacted with a response. Thank you, and we're now ready to receive your questions. Prior to that, I will just introduce our panel for you. On our panel, we have myself, Hilary Brown, the Chair of the Municipal Pension Plan, Gary Yee, our Vice Chair. Bonnie Pearson is with us. She is the Chair of the Municipal Retiree Benefits Trust. Harpinder Sandhu, Chair of the Investment Committee. Robert Weeks, Chair of the Valuation Committee. Judy Payne is our Executive Director. David Morehart is here with us from BCI. Catherine Robertson is here with us from ECLR. And Aaron Walker-Duncan is here with us from the British Columbia Pension Corporation. Thank you to all the panel for joining us for this question and answer session. So let's get started. I see the questions are rolling in already, which is great. The first question is, inflation is making it harder to afford things I need. What are you doing to help retired members? So I am very happy to answer that question to start with. The first thing is that inflation is on the minds of all of us, and we are very well aware of that. And during the presentations, we were pleased to announce that due to a healthy plan of December 31st, 2021, we are now removing the COLA cap from the 2023-2025 years. As you know, though, COLA is not guaranteed, and nor does the board have to grant COLA. So we will be looking at this every year to ensure that the plan is still sustainable going forward. As you also know, the economy is also on everyone's mind, so we will monitor our investments accordingly. But for now, we can happily say that we will be removing the cap until 2025. Judy, I'll ask you if you have any other comments on that question as well.
Thanks, Hilary. I think inflation is really hard on families, and people have had a hard time the last little bit. I think one of the ways that the board helps with inflation is to help protect the purchasing power of members' pensions, and so we see that with sustainable COLA in particular. As you noted, COLAs aren't guaranteed, but once they're granted, they form part of the basic pension or other components that are in pay. And the valuation shows that the COLA cap can be lifted. So it will be removed for the next 3 years. The board will make annual decisions with respect to COLA adjustments, including the one for January 2023. And that decision will be made later this year. So that's really good news for retired members.
Great. Thanks so much, Judy. So the next question I see is also relates to the COLA cap. When will we learn what the 2023 to 2025 COLA cap will be set at, and when will we learn the COLA for 2023 to 2025? Rob, can I turn this one over to you?
Yeah, thanks, Hilary. I think we hinted at that decision with the answer just made previously. But as we spoke about, our most recent valuation showed that the inflation adjustment account can maintain full inflation adjustments. We will make our decision shortly as a board. That decision will be posted on our website in January. It'll also be part of the Pension Life Winter Edition, the issue of Pension Life. And that COLA will take effect January 1, and it will be up to a maximum of CPI from September of 2021 to September of 2022. I hope that answers the question.
Great. Thanks very much, Rob. The next question that's coming in is, will subsidized dental benefits be brought back? Since the post-retirement benefits now are over to our new trustees, I'll turn that one over to Bonnie. Go ahead, Bonnie.
Thanks, Hilary. When the Municipal Pension Plan Board of Trustees made the decision to remove dental subsidies based on a comprehensive review of a number of factors at that time, including plan member utilization and costs, the decision to move to voluntary dental was intended to protect the sustainability of the extended health and group benefits. We do not have plans to reinstate subsidized dental benefits at this point.
Okay, thanks, Bonnie. The next question queuing up is there a process or opportunity to receive a personal one-on-one assessment of my pension options? I have contributions to different plans. I would like to better understand my pension situation. Aaron, can I ask you to take that one on, please?
Yeah, sure. Thanks. Thanks very much, Hillary, and good morning, everyone. Yeah, great timing for this question, because just in this past year, Pension Corporation's introduced a new online tool for members to be able to book a one-on-one counseling appointment with an advisor. And so if this is something that is of interest to you, you can go on the website. You can just do a search for book online appointment, and it'll take you to the information about that, and you can do it right there online. And we have the ability for our staff to pull up your file in advance, review your information, be prepared to talk to you about your circumstances and your specific needs, and answer the questions that you might have. So I encourage people to take advantage of that tool that's now available.
That's great news, Aaron, and I'm sure that a lot of members will take advantage of that. Thank you very much. So the next question is, using ESG rating-informed approach to investing is a rather anemic approach to ethical investment. BCI's disclosure of the portfolio of investments is simply chilling. What good is a sound pension if we simply contributed to leaving the world in tatters for our children by the time we retire? So, given that this is an ESG question, I'm going to ask Harpinder to first address it on from this perspective of being the chair of the investment committee, and then I'll turn it over to David from BCI.
Thank you, Hillary. So using an ESG rating informed approach, we go far beyond just the rating informed approach. I think what we have done is the board manages a plan in the best financial interest of its beneficiaries, but we also recognize climate change as an investment opportunity and long-term material systemic risk to the plan. So because of that, the best way to balance our fiduciary duty in terms of investment is and also address climate change as to influence companies to change them from within. So the approach has been not to divest, but to stay invested in those companies and steer them in the right direction. And under our direction, BCI has been actively engaged in many companies, directly engaged with them on climate-related work for more than 20 years. So we have various different methods rather than just rating, but also working with them directly. David, if you have anything else to add, please. Thank you.
Thank you, Harp. You've covered a lot of this in your previous discussion with Gordon, of course, covered a number of these points too. Ratings themselves are not sufficient. This is about active management. It's about actively monitoring risks and opportunities. And we do that, through direct engagement with companies that we own, especially where we're a majority owner. We're working with boards, we're working with management to actually make change and move towards climate commitments. Proxy voting is also a good step as well. So, we're not an ethical investor per se, but we're looking for good practice, as Gordon laid out in his. We're looking for good practice among companies and doing the right thing overall. And Harpinder, as you mentioned previously, there's a lot of things that we've done through climate action, PRI, TCFD, et cetera, that put us on the world stage with peers. We're very proud of what we have there. Our climate action plan will be renewed in the next month. You'll see that come out. But we also have an annual ESG report, which each year we continue to expand our reporting. So I hope individuals will go to bci.ca and look at some of those reports.
Great. Thanks very much, Harp and David, for answering that question. So just a reminder, the questions are coming in, which is wonderful. But just a reminder, if you do want to ask a question, enter it in the Ask box located at the bottom left-hand side of your screen. So the next question, I will be asking Bonnie to answer it. And the question is, what are the medical and dental amounts?
Thank you. I think the best way to find the medical and dental amounts for your extended health are to visit www.Pacific Blue Cross, pacbluecross.ca/MRBT. The amount that you pay in premiums is individual. It's based on your years of service, what subsidy you get as an individual, and your dependents. So I can't give you it wouldn't be accurate to give you an amount or to run through the whole thing. But if you look at the Pacific Blue Cross website and the microsite for MRBT, those numbers are there. They're reviewed annually, and any change in premiums will be announced in the Winter Life that comes out this winter. So that's where you'll see the updated premiums, but the current premiums are on that website. Thanks, Hillary.
Great. Thanks, Bonnie. Appreciate the answer. Okay, the next question is, again, referencing the COLA, the 2023-2025 COLA. And it says, is it true that the 2023 to 2025 COLA will have no cap and may be as high as the Canadian CPI? So the answer to that question is yes. We have removed the COLA cap for the next 3 years, but I'm going to ask Rob to expand a little bit on that, please.
Yeah, thanks, Hillary. Yeah, the short answer to that question is yes, it is true. We have decided to remove the cap on COLA. Previously, our cap was set at 2.1%. Now the cap is removed, which gives us the flexibility to make a decision, and that decision's upcoming, to increase COLA to the possible maximum of CPI from September of 2021 to September of 2022. That decision will be made shortly by the board. And again, we're going to communicate that decision out in January on our website and in the Winter Pension Life newsletter. Thanks.
Great. Thanks, Rob. The next question is, we are looking at dramatic global events related to climate change. While I appreciate this AGM report's description of BCI's disclosures, discussions, and assessments on the risk of climate change, will the board be more proactive, direct BCI to significantly increase investments in non-carbon energy generation and climate solutions? So I can answer that question. The way we direct BCI, it's done through our SIP, Statement of Investment Procedures, and we receive regular reports from BCI. And I can tell you that the board is exploring the feasibility of the Paris Agreement, aligning the investments, and we'll share more information when it becomes available. So, keep an eye out on the website, and we will be providing more information at a later date. The next question is our municipal pension plan vulnerable to a similar bond margin call sell-off, similar to what just happened in the UK? Harp and David, I'll ask you to take this question again, because this is, again, investment related. So Harp, go ahead, please.
Sure. Thank you, Hillary. Yes, this issue had come up in our recent meeting. We do discuss these items as they developed around the world. The UK situation is related to leverage and derivatives, but it's also due to the expectations that interest rates would continue to stay low, and so because of that, there were certain lack of communication between the central bank and the pension funds there, and the finance ministry. So I think from that. It depends. We have these conversations quite often when we do see these disruptions around the world, and we did bring this up to BCI. And from what we gather, we're quite confident that we're not in the similar situation. But I'll let David add a little more color. Thank you.
Yes, thank you, Harpinder. Yes, you're absolutely right. We're not in the same situation. A lot of those plans were collateralized. They had pledged their assets. So we don't do that to the same extent. It's something that we're actually looking to issue uncollateralized and unsecured opportunities, because that's a benefit for our clients, MPP being one of them as well. So we also, as you would have heard earlier, maintain ample liquidity. So both within the plan and then overall in our portfolio. So we're feeling quite comfortable as we work through this, and given our long-term objectives, it keeps us in a very good place.
Great. Thanks very much, David and Aaron. I'm just going to look what the next question is. Here it is. COLA again. Why can we not get the new COLA percentage info each year before January so we can inform MPP how much income tax to take off our monthly pension payments? Rob, can I turn that one over to you, please?
I think the best way to answer that is our decision in regards to COLA is based on CPI that's from September to September. And so that, given that dictates our decision comes late in the year. Like we said, we are going to post this decision on our website in January and our Pension Life newsletter. I'm not sure if there's anything else. Judy, do you maybe have anything else to add to this question?
No, I think that's it in a nutshell, Rob.
Thank you.
Thanks, Rob and Judy. The next question is, can you please explain how the disability pension through MPP works? And I'll turn this one over to you, Aaron.
Sure. Thanks, Hillary. We could spend a whole hour on this, but I won't for the purpose of today. But there is the ability in the under the municipal pension plan for members who are totally and permanently disabled that may be eligible for a disability benefit under the plan, and that would be in place of any termination or retirement benefits that the member might otherwise be eligible for. There are lots of specific eligibility requirements for a disability pension, so I would encourage you to go online, go onto the plan website, and in the search function, just type in disability pension, and there's a whole bunch of information there that's available that explains the details of what's required to be eligible for the pension. But there is a benefit available under the plan.
Great, thanks very much, Aaron. The plan's return is fantastic for the fiscal year that ended December 2021. And yeah, I agree it was, and we're all very happy about that. However, the global market condition has changed significantly since the fiscal year end. Major stock indexes have dropped over 25% from their all-time highs in December 2021. How is the plan performing so far? And what is your return projection for the current fiscal year? So before I hand it over to Harp and David, I will mention that we have anticipated the changes in the market. And so we are prepared, as Gordon said, for the rough ride that we're facing. Gordon, as he mentioned, he's taking advantage of this by hopefully buying assets that will be at a lower rate for those who have not got the liquidity and they need to sell. We are going to take advantage of hopefully buying some of those assets. But I'll let Harp and David expand on that a little bit. Go ahead, Harp.
Thanks, Hillary. Yeah, so we have anticipated some of this, and at the same time, you can never predict the future, and that's why we can't really predict the current fiscal year as markets are still fluctuating. You see a lot of wild swings lately and high volatility, but at the same time, you keep in mind that our investments are diversified, so it's not necessarily that everything's in the stock market. We do have a diversified portfolio in a wide variety of assets, and so because of that, there's balance within the portfolio, and at the same time, we look at the volatility, but we don't react to it. I think we are long-term investors. We know the markets do go up and come down at times. So wherever there are opportunities to purchase at a lower price, I'm sure BCI takes advantage of that. And when it comes down to when markets are overvalued, we do have those discussions about selling certain assets. But if anything else, I'd like to add. I'd like David to add. Thank you.
Well, thank you, Hillary and Harp. You've covered the major points. I'll just reiterate what you heard before. So maintaining a good, comfortable liquidity position means we've got an ability to ride through the rough ride, as Gordon put it. But it is also, and he mentioned this earlier, that you actually don't lose anything if you don't sell, if you're not forced to sell. That's why liquidity is so important. So having that as well, and reiterating what Hillary said, where there are depressed prices, it's an opportunity to buy as well. And given that long-term focus, this is a great chance for us to really demonstrate the power of our patient capital, as we put it.
Great. Thanks very much, David and Harp. The next question coming up is, will the MPP consider additional voluntary contributions similar to OMERS? Right now, at this time, the plan is not considering additional voluntary contributions as a plan feature. But Judy, did you want to add some comment to that, or?
Thanks, Hillary. Yeah, this has been a popular question for a couple of years now at our AGM. I think you can see what the board's priorities are. They're outlined in the current 3-year strategic plan that's posted to the plan's website. Right now, the board is very much focused on protecting the basic benefit and meeting the pension promise to plan members, as well as addressing sustainable COLA. The board's planning process, though, refreshes every 3 years. And so there's always a possibility that this will come back on the board's agenda. But at this point, it's not part of the strategic plan.
Great. Thanks, Judy. Next question. This is about Blue Cross health benefits. When is the next review of this agreement due? And Bonnie, I'll ask you to take that question, please.
Thanks, Hillary. There is not a pre-scheduled review period for extended health benefits. The new board has spent this year setting up governance structures and policies. It is our plan to do strategic planning during 2023, and certainly a discussion of review will likely be a part of that conversation. But there is not a fixed date at this point where we would review the current plan design. You couldn't, as I said, on the Pacific Blue Cross site, their microsite, the basics of the plan are there. You can also go to the mpppensionsbc.ca, and that the information will be there. And you can also contact the MRBT with thoughts on that, but to give you an exact date, there is not one scheduled right now. I also want to just quickly amend or correct a statement I made in my previous answer. Communication around rates, premiums will be made for you in January. It may or may not be in Pension Life, I'm advised. So I just need to be clear that you will get communication. The format is one that we're determining. Thank you.
Thanks very much, Bonnie. Okay, so the next question, these are scrolling down on my chat features, so I have to keep catching up to them. Can you explain how the temporary annuity works? So what I can tell you is the temporary annuity is a feature that enables members to convert a portion of their lifetime pension into additional funds for an early retirement, for their early retirement years. But I'm going to ask Aaron if he wants to kind of expand on that or talk a little bit more about it.
Sure. Thanks, Hillary. Yeah, I mean, you've covered it well. Yeah, it's just really taking some of your otherwise what would be lifetime income that's payable for your lifetime in retirement and converting that or bringing forward that some of that amount into so that it's payable in the early years. The temporary annuity is typically it's paid until you're 65 years old or until your death, if earlier. The only other thing I would add is that the plan in the past year or so added a new feature to allow members to select different levels of temporary annuity. So there's a full, what we refer to as a full temporary annuity amount, or I believe you could take a half temporary annuity or a quarter. So anyway, more flexibility for members who are considering what their income needs might be in the early part of their retirement years, and allows them more flexibility to front end load some of their pension.
Great, thanks, Aaron. And for those members out there who are thinking about retiring, I encourage you to go on to the My Account and get more information about all of these things like the temporary annuity, etc. There's a lot of good information on there and very helpful to understand what these things are all about. So thanks, Aaron. Appreciate it. The next question is, in the current environment of high inflation, increasing interest rates, and declining values in financial assets, including real estate and bonds, what is MPP's approach to controlling drawdown risk? Has MPP engaged in LDI strategies such as those employed by UK pension funds? I'll ask David to respond to this one.
Thank you, Hillary, and thank you for a very technical question. Someone's obviously watching very closely what's going on out there. So LDI is a liability-driven investment strategy, and typically it's employed by closed defined benefit plans that are very mature in their nature. So not a lot of new members coming in, and there's more drawdowns happening. So they're trying to manage their liabilities going forward. So we do not use them. We're not in that space either in any of our client spaces. But also, our approach to liquidity and the diversification that we have gives us so many more options to deal with. So short answer, no, we don't use LDIs.
Thanks very much, David. And again, I agree. Thank you very much to the person who sent in that great technical question. One of the presentations said that the plan is 105.3% funded. Can you explain a little bit more about what that number means? So I'll turn this question over to Rob, and we are also very lucky to have Catherine from Eckler, our actuarial company, here. Rob and Catherine, if I can hand that over to you, please.
Sure, Hillary. Before I go to Catherine, I think what I'll say is we do evaluation every 3 years. That valuation is based on a going concern. Based on that model of doing evaluation, which means contributions are going to continue based on our assumptions, we're in a position that we have a surplus. That's what that 105.3% funding means. That surplus allows us to do things like contribute to the rate stabilization account and contribute to the inflation adjustment account, which of course is part of the reason we've made the decision to remove the COLA cap. I think that's the best way I can answer that question. And Catherine, I invite you to add anything more.
Rob, I think you gave a very comprehensive answer to that question. Certainly, we're pleased to see that the plan's 105% funded and in a surplus position, and therefore the trustees have been able to make the decisions that they have made. So I don't have anything to add to your response. Thanks, Rob.
Great. Thanks very much, Catherine and Rob. The next question is, looking back on the last few years, there was a lot of worry about how the pandemic would play out and its impacts on the plan so far. What have you seen so far, and are we out of the woods yet? Well, the pandemic has certainly had impacts on all of our lives, and the way companies and organizations like MPP conduct their business. It's hopefully we'll be out of the pandemic soon, but at this point in time, I'm going to ask Harp and Rob to share their thoughts on what they're seeing so far.
Thank you, Hillary. Yeah, so the pandemic, of course, there's a major impact on the global economy and on people across the globe, and various nations are had reacted to it accordingly. We're still seeing, the impact of the pandemic because it was such a massive disruption to the global economy. And in response to that, you had governments pumping a lot of money and a lot of support and spending a lot of fiscal and monetary policy were adjusted to support the economies. And now in response to that, as we were coming out of the pandemic, we're seeing high inflation and a lot of other labor disruption and supply chain disruption, and not to mention a war that had broken out in Ukraine. So adding to all these disruptions, we aren't necessarily, I would say, out of the woods. I mean, I think we're still monitoring that and making sure that as we progress and move forward in our investment strategy, we're able to react and also look at the long term when we are making these adjustments. Rob, anything to add?
I think I'll add that, we take, as a board and as a valuation committee, we take a long-term view of the plan and we look many years ahead. We've made prudent decisions like reducing our discount rate in this recent valuation, which means that we have a lower expected return. That said, we still believe, we still know that we're funded well. And we have been planning for this for some time now. And one of the outcomes of that planning is our rate stabilization account, which gives this plan resiliency if, for example, we have lower returns moving forward. Thanks.
Thanks, Harp and Rob. The next question, it touches actually a little bit. I mean, Harp just sort of touched on the war in Ukraine, and this question has to do with that as well. With the war in Ukraine and the energy crisis in Europe, energy independence has become crucial. How does BCI balance the environmental factor in ESG and the fact that the world is still heavily reliant on fossil fuel? Climate change, including energy concerns, I think needs to be addressed by everyone. So at our request, BCI is addressing climate change and has been for quite some time. So I'm going to ask David to speak to that a little bit more.
Thank you, Hillary, and I'll repeat, some of the comments that I've said earlier, that we've been engaged in this since, our founding in the early 2000s, watching the progression as various agreements, have been made. We're also founding signatory to a number of things that have come along, Climate Action 100, et cetera, and following some of the various international objectives, whether it's Paris or otherwise. So it's something that we need to continue to monitor. It's an evolving science and understanding. Reporting is getting better. It's a slow venture, but it's one that we feel is important. So those initiatives are good, but we're also an active investor. We work with companies. We try to understand companies before we even invest, and we try to move them towards that responsible investing paradigm. And it's important that they balance these things. Now, to the specific question about energy independence, it's an interesting one because it's not an either or, because energy security and independence needs to be balanced with climate change. So as a worldwide investor, we're always looking for opportunities to find renewable investments, but also to find ways for companies in the existing space to do a better job in the work that they're doing. So I think, again, if you were to look at our latest ESG report, and you'll be seeing our climate action plan coming out in the next few weeks, you'll see some of those persistent efforts that we have, and we're certainly pushing regulatory bodies and others to get to better disclosure and to more understandable and consistent metrics that all of us can best understand.
Thanks, David. So the questions are rolling in still, which is great. We really appreciate all the questions being asked. But I'm just going to remind you that if you do want to ask a question, enter it in the Ask box, which is located on the left bottom of your screen. So again, it's the Ask box, and it's on the left bottom of your screen. So let's go to our next question. Will pension workshops begin again? Aaron, can you take that one?
Yeah, thanks, Hillary. I guess my first response is I'm not aware that they ever stopped, but I think what the question the asker may be asking about is in-person workshops, because we do have a comprehensive portfolio of online courses and webinars available today and have for quite some time. We are not planning at this point to return to in-person workshops, and mainly because we found that the online webinars and workshops are so much better attended. They provide members throughout the whole province with much more flexibility to attend and participate how and when they want. And whereas when we used to travel around the province delivering workshops, we might only go to some of the further reaches of the province once a year, and that wasn't really providing members with the level of sort of service that they need. And so we are continuing to expand our online program. And so again, I'd encourage people to go to the plan website and look up. There's a whole section on online courses and webinars. There are ones that members can do themselves in their own time at 2:00 in the morning if they want. If they're a shift worker and they happen to get home and they really feel important that they need to they need to learn about their pension at 2 a.m., they can do that. Or they can participate in what we refer to as instructor-led live webinar type courses, where they can participate in an online course and interact with the presenter and ask questions and things like that. So all that information is available again for everything from new members who are looking to learn about basic information about their pension plan, right through to those members that are considering retirement and want to know detailed information about options and different choices that they need to make and things like that. So again, go and check it out online.
Great, thanks very much, Aaron. And I'm really happy that somebody sent in that question, because I do want to encourage our members and everybody to take advantage of these workshops. They're extremely well done. They're very helpful. They can provide lots of information, and especially encourage our younger members to look at them and know in advance of what you need to know about your pension, because it really is your pension and these workshops are very, very valuable. So I encourage everybody to reach out and take them.
Yeah, one of the other things I'd say, Hillary, there is just, and as a quick add to that, is that one of the things we've also been able to do by going online is put these into more bite-sized consumable chunks, because as you said, there's a lot of information there, and going and talking to somebody for 3 hours isn't necessarily the best learning experience. We know that from an adult learning perspective. So it breaks it down into smaller bite-sized chunks that people can consume as and when they want.
Great, thanks, Aaron. So the next question is if your plan is with Green Shield Canada, do we switch to Blue Cross? And because this is benefits, I'm going to turn it over to Bonnie again.
Thanks. So when you retire, your coverage with your employer ends, your coverage that you have while you're active. So in our case, municipal pension plan, your option is to join the extended health plan, and that extended health plan is currently provided by Pacific Blue Cross. And in order to make an informed decision on joining, it is optional, but we strongly encourage you to maintain coverage. That information on what's covered in that plan is available at www.pac.Blue Cross CA, and it's the same website that I bobbled each time I've said it, but you'll find it there, and go to the microsite and you'll see your benefit booklet there and what's available to you as you move to retirement.
And just thanks, Bonnie. And just so everybody knows, all of these websites, et cetera, will be available at the end of the session. So, if you've missed something, then we will be making them all available. So thank you. The next question is, the Canada Pension Plan has made a net zero by 2050 commitment that includes Scope 3 emissions. Why isn't the MPP or BCI measuring and reporting the Scope 3 emissions associated with my pension portfolio? Why isn't the MPP or BCI requiring companies in my pension portfolio to measure and report their Scope 3 emissions? I'm going to ask David to speak to the details of tracking emissions. So David, can I turn it to you, please?
Absolutely. Thank you, Hillary, and thank you for the question. So I'll refer back to our ESG annual report and the stuff that we have there again at bci.ca. You'll see that we track, the carbon footprint and the information that's there, and that's where I wanted to anchor my answer here, was that getting accurate and consistent data across the spectrum is a real challenge for everyone in the investment industry. So we're working hard with regulators and others to get to a consistency in reporting. And for those that are less familiar, Scope 3 deals with, not your direct operations, but those entities that you're feeding the supply chain and other aspects of your business with. So you have a lot less influence. So we're working with companies to better understand what is their total end-to-end carbon footprint and how that comes together. So again, pushing to get better data is going to be important before you actually set a target. So we again disclose as much as we're confident in with respect to on carbon footprint within our existing strategies and plans, and we'll work with regulators to get better reporting and then build our metrics from there in future.
Thank you, David. So the next question is, do I need to let the MPP know if I go on maternity leave? If so, when do I do that? Well, first, before I turn this over to Aaron, I'm just going to say to whoever wrote this question in, if you are going on maternity leave, congratulations. That's wonderful news. And we always need more little babies in this world, as far as I'm concerned. So congratulations. And now I'm going to turn that over to Aaron. Aaron, go ahead.
Yeah, thanks, Hillary. You don't need to directly let us know, but you need to talk to your employer. And also, again, go to the website and look at the benefits that are available to you, or potentially available to you while you're on maternity leave. One of the attractive features of the municipal pension plan is the ability to purchase your maternity leave leave service if you wish, so that you could be credited with pensionable service while you're on your maternity leave. And typically there's a cost sharing arrangement with your employer in doing so. And one of the new features that we introduced, or the plan introduced, I guess almost a couple of years.
So has Aaron frozen up? I'm just stopping the session, and I know I'm speaking. For the viewers watching, I'm going to just pause for a moment, and I'll ask my technical crew if this is able to be fixed. So it turns out that it's just Aaron who's frozen up. So I'm going to move on to the next question. And our apologies for that little technical glitch. Well, the next one is actually not a question. It's just a compliment, which I appreciate the sender sending this in. And it says, considering that we have been struggling with the COVID pandemic for 3 years, I am pleased that the MPP has done a great job of keeping the plan's finances secure and strong. Well done. Thank you very much to whoever wrote that in. We really appreciate that compliment, and we continue to look forward to serving you as best as we can in these quite trying times. The next question is, part-time employees are not required to join the MPP. Why is it not a requirement that part-time worker enrollment is made mandatory? Judy, can I get you to answer this question?
Yeah, absolutely. So municipal pension plan is definitely a valuable asset. Anybody who participates in a defined benefit plan knows how much that contributes to their retirement income security. In municipal, full-time permanent employees are required to enroll, and part-time employees have a enrollment test, essentially, where they need to meet a certain amount of service over a couple of years and a certain salary test as well. The other way for part-time employees to get in is if their employer passes a resolution for them to get in. So if you are a part-time employee and you don't yet have the option to enroll in the plan because of the amount of service or salary that you're getting, then I would go talk to your employer about the opportunity for them to pass a resolution to allow you to participate. I think in terms of practical application, it's a really great benefit, but sometimes part-time employees have more competition for their scarce income. And so it's not automatic the way it is for full-time employees.
Thank you very much, Judy. So just a reminder as well that if you do have any personal pension questions, we welcome you and ask you that you send them through my account. That can be found on our website. And also, if you're asking a question here today, you can just put it in the Ask box located on the bottom left of the screen. So the next question is, real estate asset prices have appreciated significantly during the past 2 years. Housing affordability has become a major issue for many active plan members. Rents and home prices are close to historical highs. BCI invests a large portion of the plan in real estate assets. What are your outlooks on the real estate market in the current rate environment? Thanks for the great question. And I'm going to ask Harp for his thoughts, and then we'll turn it over to David as well.
Thank you, Hillary. So currently the real estate asset prices, we have seen very high prices and accelerating during the COVID pandemic because of the lower interest rates. Now we're seeing the opposite. We're seeing in the last few months a lot of pressure in the real estate market with rising interest rates, and that's the deflating asset prices overall around the globe. And so in relation to our portfolio with our real estate, we have quite a diverse portfolio. It's not necessarily just in housing, residential. We have commercial, industrial properties, not only in Canada, but around the world. And so having that diversified portfolio in real estate, and also having the understanding that, real estate is an illiquid asset. We don't trade it quite frequently. It's an asset that we keep, and we decide to sell when the prices are right. So we don't have to, we're not pressured to be in a situation where many homeowners might be. So at the same time, we do take the long-term view that as the real estate market does fluctuate up and down, we will take advantage of it where we can. Apart from that, if there's anything else to add, I'll ask David. Thank you.
Thank you, Harp. You've covered the major points there. Again, the diversification ensures that the plan's investments are well looked after, and to the extent that we're seeing inflation in this, real estate is actually one of those inflation hedges in a way. To the affordability question, though, there are a number of things that our agent Quadrille, who manages both our real estate debt or mortgage portfolio and the real estate assets, they're looking at any of their new developments, especially in the housing area, residential, student housing, those types of things, always to have components of affordability built in as well. So certainly a very close eye to this, but as Harp has mentioned, with a long-term view, we have the ability both to ride through some of the bumps that we're seeing now, but also to be an active member, in the community where we see great opportunity for that long-term capital.
Thank you, David and Harp, and thank you for the person who asked the question. The next question is, are there different levels of post-retirement medical plans that are available to members? What are the costs of these levels? And Bonnie, I'll ask you to take that question, please.
Thanks. There are not two, there's not more than one extended health benefit. There is one extended health benefit. There are two options on dental. So you can elect to join an extended health and not take dental. You can elect to join extended health and dental, and you make a decision on dental between basic and enhanced coverage when you're making your decision around dental. And those rates again can be found on the mpp.pensionsbc.ca website because they're somewhat individualized based on extended health having some degree of subsidization. Dental is 100% paid by premiums. Thanks.
Thanks, Bonnie. So the next question has got to do with the COLA cap. With the amount of surplus in the pension fund and the announcement of the removal of the cap effective January 2023, and the Board of Trustees has the right to make a decision of the amount of CPI going forward, can the board retroactively grant a one-time payment for 2021? So I'll just make the comment that the plan is not structured to provide retroactive payments. And I'll just ask Rob to speak more about how the COLA will work over the next 3 years. So Rob?
Yeah, thanks. Again, the board has decided to remove the cap on COLA, which gives us the flexibility and option to provide COLA to a maximum amount of CPI. That decision will be made annually. It's going to be made for January 2023 very soon. And it'll be made on an annual basis for the next 3 years on a go-forward basis, not retroactive, as you said, Hillary. Thanks.
Thanks, Rob. So somebody is asking if this presentation will be available for viewing or reviewing after the live event is concluded. And yes, it's being recorded currently, and it will be posted to the plan website in the coming weeks. And if, as well as a transcript will be there as well. And so you can visit it at mpp.pensionsbc.ca. And again, mpp.pensionsbc.ca. That's the NPP site. And it'll come up in a couple of weeks' time. So our next question is, we have a couple of questions about fossil fuels as part of the planned investments. That is, what are the holdings and the percentage? We do provide a great deal of information about investments in the plan's annual report, which is available on the plan's website. So I encourage you to look at that. But I'm also going to ask Harp and David to speak a little bit more about this and our holdings. So go ahead, Harp and David.
Thank you, Hillary. Yes, so fossil fuels we do have in our portfolio. We I don't know the exact number; that does fluctuate. We can get that information from our reports as outlined by Hillary. At the same time, we do invest in fossil fuels, but also try to steer these companies into more of a greener, cleaner future. And because of that investment, we do have a greater power over these companies to help us get to our climate goals. So it's not necessarily that we're sometimes whether you're invested in a fossil fuel company or not. At times we do invest in those that are willing to make that shift, and there has been progress in the near term. For other details, I guess maybe David, if you have any other additional details to add, please. Thank you.
Yes, and Harp, you make a really good point. It is, there's a lot disclosed in both MPP's annual report, our own BCI's annual report, so encourage folks to go there. We publish annually an investment inventory for all of our investments, and that is unique among peers. Nobody else does that, so that's one where you can get a fair bit of information from as well. So, but stepping back a little bit to Harp's comment, we do have some holdings, but I'll say that generally we're well underweight in this as we've shifted to broader global markets and more into the renewable spaces. So it's something that we're very active in, where we have engaged companies that are actually making progress, and we feel that that's good corporate citizen, but good for returns as well for the plan.
Thanks, David and Harp. So the next one is not a question, but again, a compliment, and I really appreciate it. It says, kudos, thanks for making the website clear for us to navigate. Keep up the great work. Now it's just spreading the word. So Aaron, do you want to make any comments about the website? It's
not really, other than beyond, thank you as well. It's great to get feedback from people on the website. We're continuously looking for ways to enhance it and make it more accessible for members and easier to navigate. There's a lot of information that's on there, and so we try and we do canvass members and look for ways to make improvements. So, but thank you for the feedback.
Great, thanks very much, and again, thank you for the feedback as well. So, the next question is, what is the COLA for September 2021 to September 2022? I'm assuming that in this question, this person is actually asking what's CPI from September 2021 to September 2022. And I don't believe that the September CPI has been announced yet. We would expect it soon. But Catherine, can you confirm this or?
Yep, thanks, Hillary. Yes, I can confirm that the CPI data is published by Statistics Canada. The September 2022 figure is not yet available. Typically, the information gets published around about the 20th of the month. So we would expect to see that information in about a week's time for the September 2022.
Great. Thank you very much, Catherine. So the next question is, there is a charge of $100 deductible for benefits for retiree. Why wasn't that taken away like it was for the working people? Bonnie, could you perhaps address that concern?
Well, as we've said several times, the plans are different between active members and your post-retirement benefit. The extended plan is designed to provide sustainable benefits for current and future retirees. So we balance all of the elements of the plan to ensure that sustainability is met. So, you can always provide feedback to us by writing to us at contact@mrbt.ca, and the trustees do review all of the comments we receive. We know that deductible is one of them. I will say just anecdotally that utilization in the post-retirement group benefit plan is different than in active. So as I say, all of the features of it are reviewed by the board regularly and periodically. But right now, the decision was made to maintain the $100 for the post-retirement group plan.
Okay, thanks, Bonnie. This is another comment. It's not a question. And again, we do appreciate your feedback. So the comment is, I would like to thank the MPP Board of Trustees for removing the cap off inflation for the next 3 years. You have listened to our concerns about the cap and the inflation today. Thank you for hearing our request. Well, thank you very much for the comment. And we're just very, very pleased that the valuation results showed that we have a healthy, very healthy plan as of December 31st, 2021. So thank you. So the next question coming in is, if I am still contributing as an active member, will COLA increase my pension benefits down the road in any way? So when we provide COLA for a specific year, it applies to pensions that members are currently receiving. COLA applies once you're receiving a pension. So Judy, would you like to add anything to that?
Absolutely. So a good question. The intent of the board's approach to sustainable cost of living adjustments is specifically to ensure that not just today's retirees, but future retirees also get access to meaningful cost of living adjustments when their pensions become payable. So cost of living adjustments, as Hillary said, are not guaranteed, but when they are granted, they're applied in January, and they apply to the various components that are in pay, whether it's a lifetime pension or a bridge benefit, and they continue for the duration of that benefit while it's in pay.
Thanks, Judy. So I'm just aware of the time. It's, according to my computer, now 11:57. So we will be wrapping up the question and answer period shortly. I do have one more question that we can cover. Just to let you know that if you haven't had an answer to your questions, we will be addressing each of those that have not been answered. But this last question says, I would like Pacific Blue Cross or another carrier to include emergency travel insurance coverage to the retirees group medical and dental plan, similar to my wife's public service healthcare plan, which she has from being a civilian retiree of the RCMP. Bonnie, can I ask you to take that question?
Thanks, Hillary, and thanks for asking the question. Our priority as a board is to continue to provide current and retired plan members and future retirees with sustainable and affordable health and dental coverage. We do not have any immediate plans to add emergency travel coverage. But as I've said previously, if you have feedback on your coverage, please write to us at the MRBT Secretariat and pass those comments along to us for the board's consideration.
Thank you, Bonnie. So there's one other question here, and we've had a number of questions about the COLA from the coming year and whether there will be a range we can consider. We expect that we will be able to provide COLA that equals the increase in the CPI from September 21 to 2022. But having said that, as we did mention, we will be looking at all the factors, and the plan takes this, or the board takes it very seriously in terms of what we provide for COLA. So we look forward to providing that information to you in January. And I'm just looking at the time, and I will just answer this one question very quickly, and then I think we'll have to wrap up the questions. Is there an average age of retired members in the MPP? And if so, what is that age? That's a great question. Judy or Catherine, do you have that number handy by any chance?
I unfortunately do not have the number handy unless Judy can provide it. I can say that it does form part of the actuarial valuation report, which is usually published on the pension website.
Yeah. And I was just going to say that information should be in the annual report, which was published in August.
Okay. Thanks, Judy and Catherine. So I'm just looking at the time. It's 11:59 now, and we are concluding this AGM at noon. So I would just like to thank everybody. This does conclude our 2022 annual general meeting. But I just really want to thank everybody who helped to make this event possible, and most of all, to all of you for joining us online today. There's a lot of work that goes on behind the scenes to make this AGM possible. So I would like to specifically reach out and thank Erin and Shannon from our board support office for making this possible, as well as all the people contributing in the background. Our communications people, etc., have done a wonderful job. And again, I thank all of you for joining us today. If we didn't get to your question, we will make every effort to respond soon on the plan website. As well, somebody asked about a recording of today's events. It will be published to the plan website under About Us. We welcome your feedback on the AGM. Your input helps us to improve this event. We do take it very seriously when you provide us input, and we take that into account when we're planning for the future AGMs. It concludes like what worked for you and what didn't. Is there anything you would like to see next year for the AGM? Take a moment to share those thoughts. Send an email to mpbt@pensionsbc.ca. And again, that email is mpbt@pensionsbc.ca. And please remember, we're always here to help you. That's what we're here for. If you have a personal pension question, remember you can sign in onto and register for My Account and locate the envelope icon at the top right-hand side of the page if you'd like to ask us a question. Your pension questions are always secure, and you will get a secure response within a short period of time. Finally, I'll leave you with a list of resources shared throughout the AGM. These will appear on your screen now. They will also be available when we post the recording of this. So if you don't have time to catch them now, then go and look at the recording and they will be available. Thank you again for being here, for engaging with your pension plan. Spread the word. Next year's AGM is on October 12th, 2023. And we really look forward to seeing all of you online again next year. Thanks so much for being here. Thank you, everybody. Take care and have a great day. Bye now.